Hello everyone, this is Blake Storm. Today I'm going to go over some simple structures that will help keep your finances safe while we navigate the world of crypto. This structure is what has kept me safe and allowed me to grow my accounts without taking major losses even during the dot-com bubble and during the housing crash of '09. Also, in this episode, we will go over 5 cryptocurrency lessons I've learned over the last 24 years that all new traders and investors need to know. So to start with, I must say we need to be really careful when trading cryptos. Reason number one is cryptos are really new. As with any new entity, there's always growth pains. Also, most of these exchanges are improving. Some we are starting to have a little faith in, some we don't know about, and it sets up a situation for scams, unscrupulous dealers, and all sorts of things. So I think in general most of these exchanges are pretty good, but it does make us want to be cautious. Another reason we need to be really careful in cryptos is, what is our government going to do? How are they going to end up taxing us? How are they going to end up trying to regulate crypto? So that's something we need to keep our eye on and watch the situation as it develops, but also it does affect our trading strategy. So to start with, I want to go over how I structure my portfolio and how I'm involved in crypto. And this is a structure that has kept me safe for going on 3 decades now, and I've been able to avoid the losses of the dot-com bubble. I've been able to avoid the losses of the housing crunch. I've been able to go back and put my nest egg in the stock market and indexes back in 2009, and I've been reaping the rewards of that ever since. So first of all, 90% of my money is in my nest egg. This is things like mutual funds, gold, silver, and so forth. So how I use my strategy is that I analyze this market based on some of the stuff I've been going over here in my videos, and when things are good, I keep 90% of my money fully invested in the markets, and that could be any market. We're talking about stocks, commodities, cryptos, and so forth. When things go bad based on my indicators, and again I'm teaching that in some of my other videos, I'll pull all this out and go to cash, which allows me to not have to take drawdowns. So for the last 24, 25 years, I've basically been steadily climbing. You have your little glitches in there, but I've been steadily climbing, but I'm able to pull my cash before we have major drawdowns. That's a huge trick of the trade. So what do I do with the other 10%? The other 10% is trading. All right. So with this trading, this is what I'm teaching you here with crypto. This is my 24 years of trading. Now, trading to me is very important. You'll say, wow, it's just 10%. But here's the deal. Trading this 10% keeps me mentally involved in the market, keeps me active in the market, keeps me on top of everything, so that when it's time to move this 90% out, my trading funds are kind of my point man. So my point man lets me know when to tell the rest of my funds when to get out of the market, or my point man also knows how to say, hey, the market is doing good and we need to get back in the market. So these two operate separately, but to be quite honest with you, I don't think I would have the success or the survival over here if it was not for this 10% trading fund. So in this trading fund, I always like to say I'm not going to risk it all on one trade. I never risk, well, let me say it like this, about 3% is what I risk. Now I'm not talking about 3% of this, I'm talking about of this 10% I move over here, about 3% is what I risk. So just for an example, if I have $100,000, $90,000 of this will stay in my nest egg. 10% of this will be trading, and I would risk about 3% or $300 on any given trade. Now, right now, I've been trading a lot of indexes, and the indexes have low volatility, which is something I'll talk about in a later video, is how to analyze volatility. but they have low volatility, and I will risk as much as 5% of this trading account. So here's the deal. This guy out here, this 3 or 5% risk, this is the tip of the spear. This is what is telling me where the markets are going. This is my wetting the tip of my finger and sticking it in the air and seeing which way the breeze is blowing. This is what makes that happen for me, so that I can guard and protect and grow this, because the last thing you want is for this area to be sitting there not growing, and the world is growing and inflation is growing, which is a topic for another video, is inflation and how to protect against that, and how to use crypto to help you protect against inflation. So this is the tip of the spear. Also, this area here is very, very fun, and this area can be very profitable. When you make profits, you slough them off of this and put them over here, and constantly keep this at a 10% rate. So the other thing I'm doing is I'm setting up an entire separate account from crypto. I mean, from this and from this for my crypto trading. And I'm putting about 5% of these funds into here. So now this area here would go to 85% since I'm involving the world of crypto in my trading. And this crypto, I still trade the 3% risk factor when I'm trading crypto, because crypto is highly volatile, as you can see on the chart behind me. Now this becomes 85%, 10%, and 5% here with a 3% risk ratio. Okay, so there's 5 things I want to go over real quick when you're talking about your 10% trading account or your 5% trading account. Is this. Number 1, you must plan your trade. This means that you need to have a strategic reason for planning your trade. You don't just plan on the hype. I've been going over several of my videos, and if you hadn't seen it, you need to subscribe and start keeping up with these videos, because mostly what we do is go over technical indicators and technical analysis, so that you don't trade the hype, you trade based on strategy. 2 is you need to trade from a position of strength. A position of strength would be here. This is position of strength. You see the moving averages going up. You need to find places here, here, here to trade. You don't want to trade out of here. This is a position of weakness. And again, you can check out some of my previous videos and we talked a little bit about this. And the third one, trade small and often. So I'm a big believer after 24 years of trading. I don't try to hit a home run. I don't try to necessarily catch this move from here to here, which that would be absolutely fine. But when you're sitting in this area here, you have no idea that all this is about to happen. So my philosophy is trade small. I'm trying to get these little bumps here, possibly a little bump here, never knowing this happens. When this happens, you stay in there. There's methods to help you stay in there. But that's not what you're necessarily looking for. You're looking for these little bumps here. Trade small. Look for mediocre returns. Also, trade small and the size of your trading account. Keep it small so that you don't get destroyed if it goes bad. But inside that trading account, each individual trade, you want to have small risk. And if you do this often, you will start getting returns. And when you lose, you will not lose big, but the probability will allow things to go in your favor over the long haul. Don't try to trade tops and bottoms. Slide this down here where you can see a little bit better. So right here, this Bitcoin went up to here. This is a top. I would like to get out right here and make money right here, but if I got out here, if I had bought from here to here and made all this money, I'd be fine. I don't have to wait till I get to the absolute top. If I would have got out here, which is probably where I would have got out, somewhere in this area here, I'd have been fine. This isn't the perfect top, but I'm out and I'm really, really safe in this area here. Also, if you think this is where it bottomed out at and you think it's about to shoot back up, you have no way of knowing. You have to wait for some confirmation days. You have to wait for some other indicators. You will be sitting over here kind of getting ground up and chewed up a lot of panic, a lot of sleepless nights, a lot of trying to figure out what's going on. Don't really worry about the tops and the bottoms. Trade the meat, like from here to here. This is a good move. This is a move you can make a lot of money on. So don't necessarily try to get the absolute bottom. Don't try to get the absolute top. Get somewhere in between, and there'll be plenty of opportunities for that. And the fifth thing is go with the trend. You must do this. Do not go opposite of trend. It's very easy to see on GDAX here that the trend's going up based on moving averages. Every trade you enter wants to be an up or long trade. Don't sell right in here because you get eaten up. Go with the trend. Same thing over here. You don't want to be buying because the trend is down. You can easily see that with moving average. So you don't want to be buying. If anything, you want to be selling, although there's no indication of sell until right here, this very day that we're on, possibly starting to break into a selling or a shorting situation. When I say sell, I'm really meaning shorting, things like buying puts and short selling the underlying security. So that's it. If you will plan your trade, trade from a position of strength, trade small and often, don't try to trade tops and bottoms, and go with a trend. You can be very successful. Also, keep most of your life savings, 90% of it secure. Use 10% to trade more secure things like stocks and indexes, and I'm moving 5% over to crypto. If you're sold on crypto, put your 10% in crypto, but don't put 90% into this thing. There's a lot of questions out there in the world of crypto, an awful lot of questions. I'm over here because I think that crypto will do well one day. I want to have my toe in the water and figure out if crypto is going to do well. Bitcoin may be at $50,000 one day. I want to be involved. This is my way of being involved. And if it starts climbing, it starts getting more secure, some of these questions start being answered, and we see the future of crypto, I will start shifting more money over to my crypto account. So I'm putting together a PDF of my complete trading system. It has taken me over 2 decades to develop this system. So you'll want to keep checking in with this channel to make sure that you can snatch up this PDF just as soon as it becomes available. I will also keep making new videos each day. So like and subscribe. Be sure to ding that bell so that you can get notified when I come out with a new video. In trading, you must train yourself to be like the lion. Most people do business and trade like a scared gazelle. Train yourself to be like the lion. Dominate your domain. Analyze, educate, and when it's time to take care of business, you take care of business. Remember, if you don't kill it, your family doesn't eat. This is Blake Storm, SniperInvestor.com.